Welcome to Cashmere Conversations. I'm here with Todd Cassler, the Chief Growth Officer of Cerity Partners. Todd, thanks so much for being here.
Great to be here.
Awesome. Well, Todd, you are the CGO of Cerity Partners. What does that mean? What do you do?
Yeah, I think it's a couple of things. One is we're responsible for driving leads into the system, generating revenue, and converting new clients. And that's across a number of different vectors that we have with the firm. But at the end of the day, I'm responsible for driving leads and revenue for the firm.
Okay, awesome. And it seems like you guys have been doing a really good job there. Over the last 5 years, I believe Cerity has gone from 26 or so billion dollars in assets under management to over $130 billion in assets under management. That means you guys manage more money than Harvard Endowment today. So when you go through that type of growth, how does the mission of the company change? How do your own capabilities change? How do your operations change? You're not the same company you were 5 years ago.
Yeah, in any company that goes through growth, you have to change. I think at the foundation of our organization, it starts with what Kurt put in place when he started that business plan that created the firm. This idea of creating a professional services partnership that's best in class. There wasn't one of those in the world, and so this idea of the culture, being a professional services firm, I think that's the key to where you start. I think the second thing is you got to hire really great colleagues and people in order to grow. And so we've done a great job bringing in colleagues and talent as we've gone through these different evolutions of growth. And then the last thing is you need to deliver best in class solutions for your clients, because if you don't do that and you don't provide great advice, we don't get any of the growth.
Totally. And so, to kind of dig in on that, people is one part, another part is thinking about strategy.
Yeah.
What has kind of been the strategy, I would say, over this last period of growth? And then how do you think about the strategy over, let's say, the next 5 years?
Yeah, so as we think about the growth strategy, we have a number of different vectors of growth. And the way that we think about vectors of growth are the solutions that we deliver. And if you look at our organization, we have roughly $130 billion, $85 billion is in wealth. We've done a number of mergers around OCIO. We merged with an organization called Agility. They do OCIO for endowments and foundations, a little bit of healthcare and family office. We have a tremendous workplace business where we're providing executive financial counseling, retirement to wealth, fiduciary services. We merged with Touchdown, which is corporate venture capital for Fortune 500 companies. And so if you look at those different things, those are all vectors of growth that are driving leads into our organization or providing solutions. So as we've gotten bigger, we've developed a more customized solutions, and we've looked at different channels that help grow our business and provide leads to our financial advisors.
Yeah, makes sense. So it sounds like, there's kind of this process of how can you first cover all your bases in a way and provide all these different services, all these different capabilities to ensure that, you guys are kind of best in class. Because when you think about wealth, it's not, I think, just thinking about the dollars in your bank account, increasing, but it's something a lot more holistic than that, right?
Yeah, it used to be in the business, and I've been in the business now for 25 years. You had an accountant who brought $1 million, and the advisor built a portfolio, and you charged 1% for that service. To your point, today it's become really holistic. Okay, you're doing tax, you're doing estate planning. Yes, you do the wealth management, but it's not as important as it once was. And to your point, some of these solutions are just table stakes. Then what are the solutions that you're offering that are differentiated, whether that's private markets, access to OCIO services? And so, yes, you're exactly right that it used to be very simplistic. Today, the solutions that you have to offer are far more advanced.
And do you think, from where you sit today, the solutions and capabilities is mature enough where it's not as much a part of the growth strategy where you have to be thinking about offering more and more newer solutions, and it's more focused on the actual client acquisition side?
You have to start with the advice, and where the rubber meets the road is when the client sits down across the table from the advisor and is going to get the service of advice. And so you need a baseline of solutions in order to compete with all the firms. And from your experience, you look at the firms, they all offer the solutions. And so then the next piece is, okay, how do you grow? And it used to be you would make phone calls or you would advertise, and from your business that you're now using technology and AI, and how are you using things like Cashmere to drive leads into the funnel, and then actually curate the lead to have a higher probability of closing that individual as a client. So if you don't stay on the front edge of those things, I think that's where a firm starts to fall down. But it's a great environment to be.
Yeah, it is. It is. And I'll come back to some of the stuff you guys are doing on the technology side, because I know you're investing in a lot of different solutions, being super thoughtful about how you grow, to kind of, I think how we think about it, I think you do as well, the dichotomy of growth, inorganic versus organic. How do you view these two strategies? How do they work in tandem? And where are you guys really doubling down?
Yeah, I think if you look at the RA industry in general, inorganic has been part of the strategy. And I don't know the exact number, but I think there's like 78 private equity firms that own some type of RIA. And so, this idea of I'm going to go out, I'm going to acquire it at a lower multiple, and I'm going to mark it up and create this platform to scale. I mean, I think that's a pretty standard playbook that people are familiar with. For us, we recognize that both of them are really important. And, we have a great corporate development team that does tremendous work led by Claire. And, we have to pair that with organic growth. And I think that you're seeing a lot of firms in the industry really double down on organic growth. And, part of that reason is that if, there's any kind of change in multiples and you're not able to do as much work inorganic growth as you once were able to do, like you're going to need organic growth to demonstrate that you can acquire these things or merge with them and then scale them. But I think the industry grows at something like less than 3%. So, finding growth is definitely an elusive commodity.
Mm-hmm. And are you guys allocating resources kind of evenly between the two?
Well, we don't necessarily think about it as resource headcount. We think about it as capital allocation. When we look at our organization, we're investing in both of them. And we're investing in a significant way in both of them, but we're very thoughtful on how we do that. We talked a little bit about at the beginning the importance of culture, and so we probably see every deal.
Yeah.
But we're really focused on finding firms that want to merge, that are colleagues that want to be a part of a professional partnership. And in many cases, the firms that merge with us aren't choosing us for the highest payout. They're choosing us for a cultural fit. And so I think that's really important as you think about scaling and growing, is that if you get colleagues that come into the organization that want to be in the organization, we're going to go through pain and growth and all those things. And so I think it starts there. But from an allocation standpoint, we're investing in both. We think both are really important to our strategy.
Yeah. I think that's awesome. And, we've got a chance to know each other a little bit. I think you have an incredible kind of energy around you, great people skills. And I think as we've also talked to people in the industry, also spoke to people at Cerity, it's been very refreshing to see this perspective of people first. I think that gets lost from the perspective of outsiders who look at this industry thinking it's just about the numbers, it's just about the dollars and cents. But even something that feels transactional like M&A is so focused on the fit and the culture and who the people are on kind of both sides of the deal, right?
Yeah, I mean, at the end of the day, we're in the people business. And there's an organization that did a study, and they looked at all of the characteristics around what is a successful client advisor relationship. And the number one thing around client satisfaction in the study was, I like my advisor.
Mm-hmm.
And so if you start with just the fact that, hey, I like coming to work every day, I like my advisor, it's good people, everybody working hard. I don't think anybody shows up any day and says, today's the day I'm going to do bad, or today's the day I'm going to make it difficult for you. But that we are in the people business, and money is an emotional, personal subject. And so, Kurt, in his philosophy, the ability to take that from a written business plan to a firm with 1,300 employees and continue to see that culture, it's fun to see.
It's really cool. It's really cool. And, we try to think about some of these same concepts from a technology side, right? Like if you're going to try to serve wealth managers, if you're going to serve financial institutions, you can't be completely prescriptive. You have to understand that there are all these human elements. And so how can we approach product building in a way that combines those kind of soft attributes, the human elements, along with, data, AI, technology, which I think is unique. I think this point in time today, because of the way technology has evolved, allows us to create those things. And so, the conversation that comes up a lot, especially in the financial advisory spaces, from the perspective of an FA, how is my role going to change, right? How, now that AI can do all these different things, what becomes my job as a wealth manager? I don't know if you guys think about that a lot too.
Yeah, I mean, I think what AI is going to do is just make the person more efficient. And if you think about what AI is not the expert, it's a skill that makes the expert better. And if we look at a financial advisor or a wealth advisor, pick whatever the term you want to use, they're the expert. And what AI is going to do is help them be a better expert because it provides skill. Now, I mean, you know this from what you guys do. You also provide better intelligence, better probability, how to improve the engagement between the client and the advisor. I think the hardest part for the advisor is believing that it works. And so, if I sit down with your team and we go through like the models and how it works, I mean, you have statistical significance that this is going to work and it's going to do great. If you're talking to the average advisor is 55 years old and has done it a particular way, you show up and you say, hey, I have this data thing that's going to optimize your client and tell you who to call, when to call. There's some skepticism in there. And you're like, well, hey, this is really simplistic. So I think the gap is between where the technology lives and what the advisor expects or thinks that it will be able to do.
Yeah, really interesting. I mean, we see that so much, and there's kind of this like self-fulfilling prophecy, right? If you don't believe it, you're not going to use it, you're not bought in, and it ends up almost negating the power of the technology, which I think is really funny. Do you guys, from a growth perspective, how does AI play into your strategy? I know we touched a little bit upon it, some of the technology that you're using, but I'm curious if you have a specific thesis or an agenda on how you want to incorporate it.
Yeah, I mean, when we think about AI, I mean, we're thinking about it broadly across our organization. And so as we think about operations and, integration and those kinds of things, so we obviously are working on it there. I think from a growth standpoint, we're looking at AI as a way to, one, can we be more efficient? So if we have hundreds of individual prospective clients, or we have large groups of potential clients, is there a way to use AI to be more efficient, identify who has the highest probability of a money emotion event, who wants to work with a health manager? How do we use that intelligence to pair it with an individual team or practice so that there's a higher probability of closing? So AI is a tool that is increasing the probabilities of a greater outcome, converting into an investment advisory client. I think the second thing that AI does is it creates efficiency around care after the sale. Okay, what should I send next? What's the next best action? Is there some kind of event? So, can you use those tools to be more efficient? Can you use them to curate leads and prospects, to route them to the right teams? And can you access markets that you otherwise wouldn't be able to access in an efficient way? That's how we're applying it today.
I think you guys are probably at the forefront in a lot of different ways, and it's been interesting just seeing how a lot of the market is adopting technology. I think if you look at technology and AI today, there's a lot less hesitation, there's a lot less skepticism, I think, from the organizational standpoint. I think to your point earlier, on the individual level, there's still a healthy amount of skepticism on what works and what doesn't. But it'll be really interesting to see how not just adoption changes over the next year or so, but the impact that it might have on your guys' business, your economics. And I think it's still a little bit too early to tell, right?
Yeah, I mean, I don't know about you, but I'm inundated by different companies that are all in the AI space selling you something.
You have
So, I look and I see lots of the same, it's an ice cream truck of all kinds of different services. And, I think one of the things you'll see from an adoption standpoint, at least, in the near term, is you'll see advisors and firms use the AI technology that's embedded into the different technology stacks that they're already using today. Okay. They partner with a firm like Cashmere and you've built the AI into your CRI. Exactly. Okay. You're using Orion. They've embedded it into what they're doing, Fidelity and Schwab. I think that's the way that you'll see it happen. Then you'll start to see the bigger firms do their own customized things and they'll layer their own language models on top. I do think one of the big challenges for the industry is around concern related to data, privacy, hallucinations, and every day the likelihood of hallucinations become less and less and less. But still, there's this concern about data. I think the other issue is like gold standard data, specifically in the RIA market, and in financial services in general. In order to run good quality analytics and language models, you have to have gold star data.
right.
And if you don't have that, that becomes problematic. And if you look at a lot of these firms, they have disparate systems. They merged a bunch of different firms together. They're on different data platforms. And so to run it efficiently and effectively is really challenging because it's not structurally sound.
That's totally right. And I think it's not the primary business of the financial institution to make it structurally sound, to bring it all together. There'll have to be some third parties, companies even like Cashmere, who can come in and be kind of a unifying layer, normalize it, ensure quality before you can do all these other things. Kind of a Maslow's hierarchy in a way, a Maslow's hierarchy of data and AI. We can coin that term right here. Cool, Todd. Well, I think this has been awesome conversation. I want to kind of leave you with a final thought, a final question that we leave a lot of our guests. If you were in the interviewer seat today, who would you interview, past or present, and why?
So there would be a lot of people that I want to interview, but I'd go back to, someone that I always looked up to when I was little is Leonardo da Vinci. I would like to interview him because, all the different inventions, all the different ideas that he came up with, I would be interested to hear how it was that he came up with those ideas back then, because I think there's probably a lot of principles that you could apply going forward. But he would probably be the person that I would interview.
I feel like the breadth of knowledge and ability that he has is pretty unmatched. Yeah. Awesome. Well, Todd, thank you so much.
Yeah,
This is awesome. Appreciate it.
good to see you.
Great to see you. Thanks.